Hello everyone. I hope everyone's having a good trading day. And today I was going to do something that I said I was going to do a while ago. I'm going to be doing the market review for Monday. And Monday was a really kind of eventful day. And I think it will be insightful for me and you guys to go over Monday's trading day. So if you guys watched the weekly profiling outlook for this week, I wanted to see price Thursday's high and into a daily gap and then start trading lower. I will get into more reasons why that did not happen and why we start trading lower anyway. Okay, so the first thing you want to notice is this overnight gap that was created on Sunday as the opening. And I mentioned how we wanted to give the week a wick. So actually, if I the weekly profile drawings, Um, and we also had a unmitigated discount level, which was this line here. And I thought that maybe price would want to also fill that. And there was also a opening range gap low within here. So if we wanted to fill that gap, we would have had to go below the unmitigated discount. Yeah. So back to what I was saying about the weekly open. You can see the Sunday 6 p.m. candle opened and gave a very shallow wick. And I wasn't convinced that that was going to be the manipulation of the week and that the week would close higher. And obviously for more reasons like this high here and this equilibrium level here, there was no way this was going to be the low of the week. So I expected price to come back down here, dig a little deeper into the weekly open and give it a bigger wick. And as you can see today, we gave that we fulfilled its wishes to have a bigger wick. So let's move into the hourly time frame and let's talk about the overnight run that happened on Sunday through Monday. So let me turn off the. Okay, so first thing that's significant is this run lower here. Why is this run significant? First of all, it takes out all of Monday's overnight run liquidity within the overnight. So what happens is we have this London manipulation lower, with manipulation to the 4-hour gap, fills it, shallowly taps into this 1-hour gap here, and starts delivering high. Now, see, before I say um, what I saw here, I wanted you guys to look at this chart and notice a sort of pattern which is forming. Anyway, until we get into that, let's notice this overnight run here. Let's drop down 15. We had this overnight run here, and let's find where 930 opens. 930 opens here, creates this big wick lower, and then reaches to this high, which is 830 high, and then swoops it, and then starts delivering lower and fills the fair value gap, takes out London's low, and also breaches the low of 930. And yeah, that's basically what happens within the 930 open. So our market open, manipulate lower into the opening range gap, and then we start trading away. And then we swoop this high, we seem to find the resistance at this high, and then we start to trade lower. Now, what I was saying earlier about the pattern that was forming, if you go back to the 1 hour time frame, notice this pattern here. High, low, higher high, lower low. Keep that in mind. Now, go on to the 15-minute. Account for the run higher. High, low, higher high, and we're anticipating a lower low. So drag this out here. And since the hourly breaker formation was treated as a a turtle soup, which was there was a drawing here, let's hit it on this time. So you can see it, yeah, this soup here. You can anticipate that this run higher here, A, B, C, D, the formation of this breaker and this leg here, if price was truly bullish, price would have used this leg here as a order block to reach higher prices. But what ended up happening is the formation of the breaker block and the engulfing of the manipulation leg was actually a turtle soup. We could not close above this run higher here. And I was actually looking at this in real time. I was looking to see if how price would react to the manipulation legs um, run. If price were to close above it and then move back into it and then start to move higher, then I'd probably be looking for longs. And I'd look at my weekly profile and see if I missed anything or if I technically did anything wrong. But what really ended up happening was what's supposed to happen, which is first of all to give the weekly open a bigger wick, which this small wick right here does not account for manipulation, but wicks like these and especially this distribution lower can account for manip prices lower. So as you can see, the formation of a bullish breaker is actually a soup. This means that we're in bearish order flow. And what adds to this is actually the 15-minute break. So you see with the overnight run higher, A, B, the high and then the low, and then the higher high. And what was nice about this higher high actually was that it was a turtle soup of another breaker. So it was an external breaker turtle soup and an internal breaker formation. So the high low, higher high, and then subtrate to the lower low. Let's zoom in a little bit, and I want to turn on my executions. So after we had this run higher and this low here, then we had the manipulation as turtle soup here, and then we start seeing a shift in order flow and a shift in market structure. What do you notice here? First of all, there's another breaker in. I'll give you a second to see if you can find it. High, low, higher high, lower low. What does this gap here become? What does this 5-minute gap here become? This becomes a unicorn gap because it's fair value gap created with a breaker. So price is likely to react off of this gap here more than it is to react off another gap. So the first entry that you could go off here to anticipate the move lower, as I just said, we had the soup here, and this was the manipulation leg. So we were looking for this leg higher here to be engulfed and then used as an order block, which as you can see, we run back into it, accumulate, and then dump lower. So this leg here was used as a order block, and since it was manipulation higher and soup here, you can anticipate that this leg would be engulfed. As you can see, it does that pretty aggressively. So the first entry that you could have based off of this was if you're a soup trader, which I'm not, could have taken this soup entry here. And a friend of mine actually took this entry, and what was funny about this is that it was such a predictable entry. It was like I knew he was going to take it because of how clean it was and how everything aligned together. And it was nice for me personally to see how I'm learning from him because he's way more educated on this topic than me, especially with breakers and manipulation stages. Yeah, I'm still trying to learn. Yeah, you could have taken this soup entry here. So this was the first entry, but since I'm not a turtle soup trader and I like conversions and continuations, what I waited for is a continuation and a retracement to engulf the leg lowers low. So the manipulation leg here, which is used as support later on. I wanted to see this get engulfed and closed below, and then return to later and then use a support. Notice what happens here. After swooping this high here, we get this huge displacement move lower, inversing this gap here, and taking out lows and market shifting below this intermediate term low here. The first thing you wanna take notice here is that if you entered on the close of this gap here and you had your stop as, for example, this candle high here because it's a Mr. block. It's not Mr. block. Where's the Mr. block? You could have had it at, make it the body high, okay? Targeting the low here would have provided good risk to reward, but with a type of inversion like this, you would have had to weather some drawdown. But in this example, you didn't. But usually with this type of displacement through a gap, you'd expect some type of return here and float around and around equilibrium, and then we would drop lower if that's where we really wanted to go. What I did is I actually entered off of a support level order block. So notice here, after we tapped into this 1 minute gap, we started trending lower with an accumulation style. What I noticed here is that once we CISD this candle here, we started using the consequent encroachment as support to go lower. We broke down lower, another CISD candle. I entered on that one, that was my confirmation. You could have entered off of this candle here, but I chose the safe route. I took the second stage one, and that was my entry. And I took my profits once we took the low there. Okay, so let's go back onto the 1 hour time frame, and I wanna take note of something that happened here. Notice this big wick here. When this was actually happening live time, I was actually live streaming and I said that I'm gonna get all the charts here because what I'm gonna be trading today is higher prices because I want to see Thursday's high get breached. As you can see, we don't do that, and possibly an S&T between those. Anyway, what I'm trying to say is with this wick here, when we were floating around this price range here, I was like, okay, we're probably gonna inverse this gap here and we're gonna market trip below this low. So I'm not gonna be looking to take any longs today. I got off the charts and then that was it. But then I was actually in the gym. I looked at my phone, I checked the charts, and I saw that we had actually formed a huge wick here, and this gap was still in respect. So I anticipated a return back to premium of the range, and that's where this stuff happens here. So if you measure this range here, here's discount and premium. I expected a return back to premium, and if we were going to respect premium and respect this manipulation like as the order block, then we wouldn't take this high here. And we would probably remain somewhere here and start moving lower if we respect this manipulation leg as an order block. So as we return to premium after that big wick lower, let's go on to the 1 minute time frame. And let's notice what happened here. So we had this steady run up higher, and in my eyes, this is accumulation. So we accumulated a bunch and accumulated a bunch and a bunch and a lot more. And then we had some interesting price action here. Even though it was very choppy, it seemed as if it were very clean and very algorithmically efficient. So notice here, we have this low here, so we have a low and then a high and then a lower low. And this is actually a turtle soup for a bullish breaker. Granted, this breaker did not hold, but it was nice to see form out like this. So yeah, so the low, the high, the lower low, and this low here, second manipulation, and also I think this was into a high time frame gap. Yeah, it was into a high time frame gap to here. Because the first move lower, I mean no, wait, was it the 15 minute? Okay, okay, yeah, 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 here. So notice on the 15 minute, the low of A, which is the low, high, low, low. So A was actually the high of a 15-minute gap. So this makes this low a nested low. So it was in high favors that this low was going to be taken out and then start retracing from it. I mean, start moving off of it because it was nested low and it's a high rally gap. So it was self-explanatory that if we sweep this low, we're going to have to move into this gap here. And making it a breaker foundation just makes a high probability. I would have taken an entry here, but the problem was there was no gap here that I was take off. I mean, that I could take an entry off of. So no entry, but this was nice to see play out very clean. So we had this low, high, lower low, higher high over here, and then this higher high was treated as a breaker because we were just in a manipulation leg lower here. I mean manipulation leg higher, and we anticipate this to be a support of an order block. So I'm not surprised that the breaker formation was not used as support later to move off higher because we already did that here and the manipulation that was used on our block versus here. And if we go back into the 15 minute, I want to see what happened in the premium session. session. Okay, so you know how I mentioned that the breaker, I mean the this run here on lower time frame was actually accumulation because we steadily ran up higher and higher. I think it will look nicer in the 1 month time frame. So notice this steady run here. But also people would look at this and say, oh, this is just a trend higher. What really this is, because you can see the wicks and it's like kind of low resistance. You can assume that there are lots of low resistance liquidity here. So I was anticipating for all this liquidity to be ran during the PM session and possibly into the next day, and that's exactly what happened. And let me go on the 15-minute time frame. Yeah. So let me make this slow periodic up. Okay. So you see within this candle close, the low of the range was pretty much guaranteed because after this range condition is taken, our eyes shift directly towards this low here. And that was basically the entire of Monday's market recap. We went over the overnight run, we went over the breaker manipulations, went over a trade recap, and went over PM session and how it reacts to previous session moves. So you see the AM trended and then the PM reversed, the PM liquidity. I remember in one of the earlier episodes of the ST 2022 mentorship, he spoke about going into your charts and marking out each session open and closes and noticing what each session actually did. And I think one of the main reasons he was trying to send out with that message was actually trying to delineate a raise that would cause this type of movements and the type of price action that would cause price to move in these certain ways. The algorithm is not coded to say, okay, listen, if the AM session trends, you know what, make the PM session reverse. Because you know that's not always the case. It was the case here because price allowed it to be that case. You know, the case that we had here was that price trended in the AM session. For what purpose? You know, you always want to ask a question. Always want to ask the question of what was the purpose of this move here? Because price moves for a purpose on its solid. Price trended here to move into this manipulation leg here, and we anticipated this leg here to be used as a order block. And if we measure out the equilibrium of this leg here, you can see that price nicely. You can see like made around the premium I mean, the discount premium, and also consolidated around the equilibrium level until around 1:15 p.m. where we got to spacing kind of lower, and then we started trending lower slowly. So you can kind of frame off why the AM would trend and the PM would reverse. In other cases, what would happen is the AM would trend, and then people would say, okay, the PM should reverse now because the AM trended. But what really happens is the AM trends, the PM retraces, and then the PM expands as well. Anyway, that was just some extra talk. Thanks everyone for watching, and I'll be releasing 2 videos today. I'm going to be trying to release a reading video where I'm just going to read for a couple of hours. I'm going to post that video. And I'm going to be doing a video with a friend of mine, and we're going to be going over today's price action, which is Tuesday, and that should be interesting because today we had some nice price action and we could have framed some trades off of, and we can interchangeably critique our biases and kind of frameworks. So we can finally get this off my chart because it's been killing me for the last for this trading day. Okay, so I'll see you guys next one. Until then, be safe.